Hi everybody, this is Jazz, aka Trend Trader for you. So this week I'm just going to touch upon 9 sectors that make up the S&P 500. Basically, these 9 sectors, which are XLY, as you can see right here, XLK, XLI, XLB, XLE, XLP, V, U, and F. They make up the S&P 500. Okay. So if the market is moving to the downside or to the upside, the majority of the sectors are also kind of moving in the direction of the market of the S&P 500. Okay, and we'll go in a little bit more detail talking about them. So you're looking at a daily chart of XLY. Okay, and clearly you can see we had a nice trend to the upside. And in my last video we talked about breaking off a line. Very simple tool. And for people who are totally new into trading or investing, that's all you need. Okay, and for people who are intermediate or in advanced level of trading, you need a lot more than that. Okay, and when I say a lot more than that, meaning you need to understand the technical analysis, the aspects, the factors of the technical analysis, which is trend, support and resistance, candlesticks, major simple moving averages, the volume, the indicators, blah blah blah, all that stuff. Okay, so clearly the trend is broken. Okay, so most of the sectors look just about the same, but I'll review all of them, give my very quick take on it. So XLY, okay, XLY came down, big move to the downside, and obviously, as you can see, again, I'm looking at the daily chart. The red line, the red moving average is your 200-day. Then you have your 50 blue, and the yellow one is a 20. And obviously, this was a huge move down. And in a way, you can say this is somewhat of a flag pattern. Okay. Draw some couple trend lines, right? So you somewhat of a pennant flag pattern, you could say, but you also have to look to the left of it. Okay, what is to the left of it? The left of it is the trend. The trend was down. Now obviously the trend is up. Can you take a long position at it? Definitely you can. The reason why I say you can trade with the trend, against the trend, obviously we're trading with the trend, riding the ebb and flow kind of analysis. You just have to make sure where your stop is, okay? Because you don't want to miss out. If it ends up moving from here, you don't want to miss out the train to get on board. But if it doesn't, you're proven wrong fast. So whatever trade that you take, you want to get in a trade where you're proven fast right away, okay? Fast and convenient, rather than waiting for days and weeks. You want to be proven fast. So how do you take that trade? You take that trade where your support is, right? Where your resistance if you're shorting. And you're not gonna, wiggle in the middle, okay? You're not gonna play, the strategy is, if you're playing tennis, right? I used to play tennis in high school and college. So what I learned from, my coach or whatever, the players that I played with, that you either play at the net, okay? You either play at the net or you play at the baseline, okay? Toward the end of the court. You don't play in the middle. Because what if the ball comes, right? What if the ball comes and it bounces right at your feet and you're standing middle of the court? You basically have no room to swing the racket, okay? No room to take a step forward, no room to take a step backward, because your ball is coming right at your feet. But let's just say now you're at the net, okay? Now you're at the net. Ball is probably coming at pretty high force, but you can still swing the net, still swing the racket and have a good rally or whatever it is you're doing. Or you can stand at the back, all the way at the sideline in the back, and you can have enough time to move back, move forward, whatever you need to do to hit the ball and have a good enough rally or whatever it is that you're scoring, right? So trading is kind of like the same way. You always want to get in a trade where you're proven wrong or even right very fast. If you're proven wrong, you want to be taken out as soon as you can, which means you are going to take a trade at the right place, okay, at the right resistance, at the right support. So having that set, let's look at the XLY. Okay, so what I'm seeing in here, sorry, there's so much echo in this house that when the babies cry, it's like, you know, it goes over all the walls. Actually, I need to pause it. All right, sorry about that. So going back, okay, so where are you going to take this trade so that if you get in a trade, you are proven wrong fast? Okay, so let's go in here. This is where the resistance is, right? You see that resistance being tested here over and over, right? Price comes up, comes down, comes up, comes down, comes up, comes down, right? Comes up. You see how your resistance is testing over and over. So what is the trade in here? Okay, I'm actually giving you guys a trade. Again, my opinion. You take it or not, I don't care. It's your money, your bank. You know, nobody sends me a Christmas gift, and neither I expect anything. So here's this beautiful resistance. Okay, beautiful resistance, and getting tested over and over. How would you take this trade? There are many ways to take this trade. I'm not going to go into detail, but you are going to wait for the resistance to be tested, and either the price actually breaks out of it. Okay, price actually breaks out of this area, okay, goes up, right? Possible pullback where the price broke out of. This is where you're gonna go along, possibly to meet the resistance in here. Okay, right around this area, that's where you can pull out. There is a somewhat of a risk-reward ratio, very small risk. If you take this trade, pulls out, there's many ways to use the stop. You can either use the stop right underneath this candle, okay, that's the stop you can use because this is a recent higher low. You can put your stop under here, or you can actually turn a day trade based on the price when it shoots up, right? When it shoots up, find it, find actually support in the smaller time frame. An hourly 30-minute would be sufficient enough to take that trade. You can use that and put your stop, I don't know, maybe underneath this based on that base that forms in the 30-minute or an hourly time frame. Or I'm a safer guy, okay? I trade small, but I trade where I'm definitely proven wrong along with the institutions. That is something that you need to keep in mind. When you are proven wrong, you don't want to be proven wrong with the day traders, right? You want to be proven wrong with the big institutions, the traders or the investor that initiate the trading activity, okay? Not the people that are just basically looking for income plays, okay, or daily income kind of plays. Then again, it all comes in. You need to classify, are you a day trader, okay? Are you a swing trader, or are you a long-term trader, right? If you're a long-term trader, you might not, like I talked about last week, all you need is a line tool, right? That could be good enough for you, a longest term trader. You believe in the company, not the stock. Stock goes down, you know, you believe in the company. You did the fundamental research. You're long. You could be long here. Price comes down, you're long again. You could be picking up more stocks. And longer term, you know that most of this analysis that you have done fundamentally is going to pay off, okay? And that's what the trading is all about, investing is all about. You got to do the homework. If you don't do the homework, you know, this is where a lot of people lose money. So anyways, going back to this, somewhat of a, you know, resistance being tested, let it break out, possible trade, even right above this Friday's close, price triggers above, you can wait for the close, or if it triggers above, stop underneath, or you wait for some kind of daily pattern, okay? Again, the trend is down. I do want to stress that, okay? I do want to stress the trend is down. Okay, you got to do a little bit of analysis, put your trend lines in. Possibly, you know, this was your first test, you know, initiation of the downtrend, and you had a lower high. You could have a possible lower high in here. It might not even go here. It might just go right around here and retest. Maybe 50 SMA might come in here. You can take the trade as far as, you know, profiting in the trade, or you can even go short. So look at what you see right now and act on it, rather than saying, oh, you know what, I'm going to go long right in here, okay? Price might not even come there. So act on what you see rather than what you want, feel, think, you know, all these speculative words. You don't want to use that. You just basically want to trade on what you see. You know, that again, that is just my opinion. You can trade however you want. XLK, most of them are the same things, guys. Same things, like, you know, same analysis on XLY. You know, goes on here, resistance tested over and over. A beautiful trend line, if you could see here, right? Beautiful trend line connecting these little dots, and you do have resistance. All this area is resistance, right? This is where the I want my money back traders comes in, okay? XLI, same thing, right? Same thing. Don't need to talk about it. Actually, this is more of a bigger downtrend, right? Bigger downtrend. XLB materials, XLE, XLB, XLI. This has been killed for a good amount of time, right? Same thing, guys. Actually, this one is, I would rather wait above this area rather than this. You want to wait above for it to clear above 43.65 area on there. XLE is obviously big downtrend in it, right? I kind of like what I'm seeing. Okay, if you see in this lower highs and lower lows, I like how it's basing here. This is the first time, if you look to the downtrend from May all the way down to September, this is the first time it's actually kind of basing for longer than it had in the past. See how it based here, came down, based here, came down, based here, came down, based here. This was actually, could have been a very good trade around here, but never triggered on that part. Same thing's happening. So I'd rather wait for some kind of break above maybe possibly 65, 66 area. And there is a risky one here, only because this is not, I wouldn't really call it hammer, but there is a bullish sentiment in here. I don't like the volume in it. There's also a gap in here, so maybe possibly even move to the downside, fills the gap up, and see a reversal candidate. That's a hammer, guys. That's a hammer. It's funny, that's a high wave doji, and that is not a bearish engulfing. Okay, that is not a bearish engulfing. Bearish engulfing only happens in an uptrend. That's a bearish harami. Okay, I can go over with these candles over and over, but that's a hammer. Had a beautiful move to the upside and follow through. That was a beautiful trade. That was a beautiful trade. Very low risk trade with your stop under this, long above this, and you got 62 all the way. Be reasonable. 65. Let's just say that's 3-point move on there. XLP. Your consumer staples. Again, same scenario. I don't want to wait above actually this break. And again, there are trades in here, but you can always, when I ran a chat room, I said start with a day trade. If you really want to start with a longer term trade, start with a day trade. And if it comes out, and you don't even have to wait for the end of the day candle that way, right? Because as a swing trader, you want to see how is this daily candles gonna pan out till 1 o'clock, right? Maybe you can wait till 12:45, maybe 12:30. A lot could happen in last 15-20 minutes, but you'll have a fairly good idea when you want to start and initiate a swing trade by last 15 minutes, 20 minutes, right? Unless there's a huge news coming out or there's a huge volume spike to the downside. Again, that is all speculative. I'm all talking speculative that, but because anything could happen in last 10-15 minutes. But there was a resistance here, right? That was a resistance. Obviously played in very nicely. Price came back. That's a good move. That is a beautiful move to the downside from here, and it's getting tested over and over. So let's see if it tests above around this area. Possibly you are below, whatever death cross, or death cross meaning what is it, 50 crossing 200 day or something like that, or one of those. But I strictly look at the technical analysis, the candlesticks and the resistance, and obviously this worked out beautifully. Let's see if it goes up here, clears this area to the possible. In fact, I like this one because it has no resistance all the way till here, so this could be a very low risk, high reward kind of trade on XLP. And consumer staples could be the way to go, because this is something that we need on daily basis, right? XLV is healthcare. I do like this one. Again, same thing. That's the resistance. That's the nearest resistance right around here. So not kind of fan of it, only because the risk, the reward is smaller, but the reward is there. Okay. XLU is your, wow, that we talked about this one. I think we talked about this long, possibly was it around here, and it did quite a bit. And I think I lured it about in here to take some off. Okay, had a nice alert from here, possible move to the upside, and just kept on going down. So this one is definitely a downtrend. You see a lower low in here, right? And trying to see if maybe a break, that's rather actually looks like more like a shorting candidate below this area than a long. But if it you can go either way, right? You can go either way. So let the chart tells you if it wants to go up, you take the long, and that's the resistance. That's where you'll take profits. And if you want to go short, this is where you go short with a stop right above here, and it could go look, you can look at the bigger chart, but it is definitely below. A lot of these ETFs are below 250 and 20 for sure, and some are testing the 200-day. So just be careful on what you trade. XLF, I like this because I see the resistance right around here. If you do try to initiate this kind of swing trade, seeing this little break of this little triangle, whatever you can, pennant, flag, right, whatever you want to call it. This could be a long right around here, okay, right around 23.24 with a stop 22.76, or you could even put the stop under here. Just that is your call. These are just my opinions, and you take them or not, totally up to you. But definitely, if you take it long, this is where you want to be. Here's another thing, guys, that when I put a trade out, okay, and I put my call out, whatever it is, on StockTwits, and I say, okay, this is where the resistance is, that doesn't mean that you have to pull out, okay? What that means is you giving yourself a roadmap, okay? It's very, very important when you get in a trade. You got to know your entry, you got to know your exit, you got to know your target, you got to know your stop and all that. But you have to have a roadmap, okay? You got to have a roadmap, or say, you know what, this is where I think that price is more likely, or maybe 80-70% might have a pullback from this area, but it might not, right? It might not. So you wait for the weakness, but you still stay in the trade, even by 12 or 20%, right? 20-30% of it, you can still stay in it, because what if it only goes up in here, sucks up all the supply that's to the left of it, and doesn't budge or doesn't go down? You'll have another push to the upside. That happens. That always happens in day trading. So to letting your winners run, even 10-15% of it, it can pay off for those few stop losses you have. And this is all about trading. You're finding a setup and abiding by it, and abiding by your trade plan, which brings me to having a trade plan. You gotta have a trade plan. Gotta have. If you're day trade, if you're a forex trader or futures, whatever you are, you need to know, okay, this is the tick size I'm looking at, CL. If you're trading crude oil, that, okay, I'm trading crude oil, my first target is 10 ticks, okay? If I get that 10 ticks, I'm moving my stop for the rest of the lots. You could have 2 lots traded, CL, every penny it moves, that's a $10. So pay 10 pennies that it moved, that's $100 right there per contract, right? So you have 2 contracts, that's $200, right? So you take some off at $100, right? 10 tick, and the rest of it for the next lot or second lot, you have 1 lot, move that stop to a break even. You got nothing to lose. If it comes down, causes a breakout, it causes you to break even, you may still make $100. But if that just shoots up, right? If that shoots up, you can trail it by maybe 5 ticks, 10 ticks, 10 ticks, whatever it is that your strategy is. But all I'm saying, you gotta have a trade plan. Once you have a trade plan, if that trade plan is working, you have nothing to fix. But if you're all over the place, you got your whole trading approach to fix. So that's it for that. And did a little bit of something different on it. And so again, these are all the sectors that makes up the S&P 500. There are 500 stocks in there, which most of them belong in these sectors. So if you go to sectorspiders.com, you'll see that XLF is probably have maybe 30-40 stocks within this, probably more than that. So each one of them have a variable amount of stocks within each sector. Okay. All right, guys, take care, and I'll talk to you guys next week.